to demonstrate this is in all of this chaos, if Bitcoin or crypto assets in general were truly a legitimate off-ramp and salvation from US dollar hegemony and all of this stuff, why isn't Bitcoin at least at 35,000 a coin right now? It's barely above 28,000. It really hasn't moved that much. And I think the real answer is that most people in Bitcoin are not trying to hedge their existing fiat currency exposure. They're just picking off people in retail.
Billionaire venture capitalist and Chairman Palihapitiya has expressed skepticism that Bitcoin can replace the current financial system. Palihapitiya doubts that Bitcoin has gained enough global users to seriously challenge existing banking systems. The price of Bitcoin would be much higher than the current value of $28,473, especially considering that it was worth $19,662, if it were a solution to the worries over the dominance of the US dollar and banking stability. Palihapitiya criticized the Federal Reserve for raising interest rates by only 25 basis points the day Silicon Valley Bank failed. He thinks the Fed should have raised interest rates by 50 basis points during the height of the 2008 financial crisis to expose the systemic problems. Palihapitiya argues that the financial system's fundamental problems cannot be ignored in favor of band-aid solutions, even if this approach may have caused short-term panic. A prominent Bitcoin advocate, however, has publicly stated his doubt that Bitcoin holds the key to the problem's resolution.
Look, MMT was, in hindsight, idiotic. In the moment, it never quite made sense, but in hindsight, it's clearly idiotic, and I think that we can properly dispense with that. But the reason that we print so much money is sort of what Friedberg says, which is that we just want a well-functioning society. And the simplest and shortest way to do that is to make sure that there aren't any winners and losers anymore. And the most effective way to do that in the markets is with money. Print a bunch of money and there are no more winners and losers. And so everybody can kind of win. Some people may win more, but nobody really ever loses. So I think that's the MO that we're operating under. The thing is, I don't think that...
There's something unhealthy to that, Chamath. You're sort of alluding to no losers.
That's a more philosophical and a commentary on capitalism and a bunch of other things. And you're right, I don't think it makes sense. I do think you need winners and losers to really make society function well. But the other part of it is like, does it reinforce or does it decay US dollar hegemony? And I think it actually reinforces it. And the reason is just very practically speaking, when you look at how dependent other people, other countries are on the US dollar, in times of stress, they actually become more dependent. And that has a lot to do with their borrowing patterns, the amount of dollars central banks need outside the United States. And so what did you see in a moment of stress? Actually, the Fed opened up swap lines to all the central banks that they work with, their most important operating partners, so Europe, Canada, Japan, etc., Switzerland. And they moved the liquidity window from weekly to daily, and they pounded the swap lines. So I don't know. I think that most people that kind of like, it's like a boy crying wolf. Maybe at some point somebody will be right, but you're going to lose so much money trying to take a point of view around this topic that it's more practical to just look at dollar flows. And dollar flows go up in moments of stress, not go down. And they go up in a distributed manner across the monetary plumbing of the world. Yeah, it's the latter. I mean, I think that there was a rumor going around, I don't know how true it is, that FTX was days away from getting a critical approval by the SEC to actually even further legitimize their US exchange before they went out of business. So I think Gensler had to pivot very hard from, at a minimum, being very pro FTX, and there's all kinds of stories about his interrelatedness with Sam and his family, to very anti-bit or anti-crypto in general. That's clearly happened. But look, I think that this is like a lot of tin hatting, which I don't think is very productive. If you look at the total number of non-zero Bitcoin wallet addresses in the world, and let's be extremely generous and say it's 100 million, there's still 7 billion people in the world. And so I just think everybody that tries to speak about the fragility of the US and worldwide banking system is right, and that part I think is quite lucid and unemotional. But every time they try to connect it to Bitcoin, they sound like a crazy person because they're just talking their book.
And that is exactly the case, by the way, with this kid, Nick Carter. Yeah.
And the best example to demonstrate this is in all of this chaos, if Bitcoin or crypto assets in general were truly a legitimate off-ramp and salvation from US dollar hegemony and all of this stuff, why isn't Bitcoin at least at 35,000 a coin right now? It's barely above 28,000. It really hasn't moved that much. And I think the real answer is that most people in Bitcoin are not trying to hedge their existing fiat currency exposure. They're just picking off people in retail. And they're just day trading this thing. I mean, how else do you explain an asset that is not absolutely ripped in the face of all of this terrible news about the financial system? And I think the answer is because it's still a cul-de-sac of users. It's not broadly available, not broadly adoptable, not broadly used. I still believe that it's valuable. I was the earliest proponent of Bitcoin, 2011.
Yeah.
2012. So I believe that there's a place for it in one's portfolio, but I just think connecting these dots misses the point. And I think the point is much, much bigger than a crypto off-ramp. The point is that we have a lot of systemic shocks that are building up in the system. We have broken a ton of the systems that cause the financial infrastructure and the world to work properly, and we are just starting to uncover how they're broken. So I think we need to focus our energy on that and dial down a little bit of the Bitcoin maxi stuff because it distracts from a really important set of topics that are more inclusive and actually touch 7 billion people. My point is, put this in the who cares bucket and get back to the facts. Friedberg mentioned it. We have a debt ceiling problem that's in the offing. Sachs mentioned it. We have a commercial real estate crisis. We just talked about the fact that he didn't raise rates enough, nor did he cut enough. So we're in this weird middle path that Jay Powell we're talking about. So those are the facts on the ground that I think we should focus on because those will have implications to how people can borrow, start businesses, capitalize risk assets. That's a big problem.
Bitcoin's fixed supply is one of the main reasons why it's a good hedge against interest rate hikes from the Federal Reserve. There will only ever be a total of 21 million Bitcoins in circulation, in contrast to the infinite supply of fiat currencies that central banks can print or manipulate. This implies that the value of the cryptocurrency will rise in tandem with its increasing demand. In addition, Bitcoin is not governed by any central authority because it is decentralized and runs on a peer-to-peer network. Because of this, it's a safer investment during times of economic instability. Bitcoin's rising acceptance as a means of payment is another factor contributing to the currency's status as a possible hedge against Fed interest rate hikes. Bitcoin's value is expected to rise as more retailers and services start accepting the cryptocurrency as payment. The positive effects of rising interest rates may be partially mitigated by the increased demand for Bitcoin. Last but not least, Bitcoin lets people take charge of their own financial futures and make smarter investment decisions. Individuals have no choice but to accept the whims of governments and central banks in conventional banking and financial systems. Bitcoin users, on the other hand, are in charge of their own financial and investment futures. Bitcoin investors face risks due to the currency's price volatility and the unregulated nature of the cryptocurrency market. Bitcoin is still the best option for those looking for a decentralized, global currency that can act as a hedge against inflation and interest rate increases. Thank you for watching Market Empire, where we strive to provide you with valuable information that can help you make informed investment decisions. Now that you've heard Chamath Palihapitiya's thoughts on Bitcoin, what do you think? Do you agree or disagree with his views? Let us know in the comments below, and don't forget to like and subscribe to our channel for more insights and analysis on the world of finance.